Hey guys, my name is Kristen and I'm the founder and managing attorney of KK Legal and Advisory Services. I'm here with my CPA, Ghazad, and we're here today to discuss some of the main questions that we both typically get from potential clients and new clients. I'll let Ghazad introduce himself.
Thanks, Kristen. So I'm a CPA in Los Angeles. We mainly focus on tax planning, preparation, advisory services, and a host of different services for our clients. I've been a CPA for a number of years now. We have a lot of experience with helping people like Kristen in various different industries.
Thank you. Well, let's start with some of the most common questions that I get. So I get, what type of entity should I form? And to just go over a couple of the most common ones, we have our LLCs, our corporations, and our S Corp classifications. From your perspective, what is the go-to entity that people should form?
Yeah, I don't think it's one go-to entity that people should form necessarily. There's no one right structure.
It depends.
It depends. I know it's a bit of a cliche thing to say, right? And you don't want to kind of get off as like you're taking the easy route and you're taking the cliche route, but it really does depend. And the reason for that is because your entity structure will determine how you're being taxed, whether it's a flow-through entity or you're being taxed at the entity level. Also, along with that will come what kind of deductions you'll get, what kind of credits you'll be available to you, and ultimately the wrong entity structure could lead to higher taxes and complications down the road. And if you figure that out later, it's going to be much more expensive for you to restructure. That's why it's better to just plan from the start, talk to an attorney, talk to CPA, and choose carefully.
Yep, I totally agree with you there. It's always good advice to involve your legal counsel and your CPA from the get-go before you even form your entity. So from my perspective, it really also just depends on what type of business that the client is running or plans on forming. So let's just pick one example. So a freelance consultant. So let's say they're doing consulting for marketing or licensing or whatnot. I would typically lean more towards an LLC. Mm-hmm. That reason being the individual owners of the entity will be protected and will be shielded from liability. So if there's ever a situation where they enter into a contract and the opposing party sues them for breach of contract, the individual owners of the LLC's assets will be protected. The LLC corp structure generally is a lot easier to follow in terms of formalities. Sure. We don't have to go through annual meetings. We don't have to elect a board of directors. LLCs can either be member managed, meaning they're managed by the members or the owners of the LLC, or you can appoint a manager, so it can be manager managed. So from my perspective, if you're a freelance consultant or have a small company where you're offering services, I typically would vote LLC. How about you?
Yeah, I think for tax purposes, generally speaking, when you're active in a business, S corporation is a better structure for taxes for a few reasons. Mm-hmm. One is that you're not subject to self-employment tax. So LLCs, by default, when it's more than one member, they're taxed as partnerships, mm-hmm. which are subject to self-employment tax. Now, both an LLC that's taxed as a partnership or an S corporation are both flow-through entities, so there's no taxes paid at the entity level. Rather, it's flowed through and paid at the individual level, mm-hmm. right? So because of the fact that LLCs are subject to self-employment tax, you have this roughly 15.3% extra tax that you would pay, which you'd rather not pay. Yeah. However, if you choose to be an S corporation, now you're going to be subject to reasonable compensation, which in the law says that you have to pay yourself a reasonable amount compared to other C-level executives or other owners of similar businesses that have comparable income in the comparable industry, right? For that purpose, I would say that S corporation tends to be a little bit better. Even with the reasonable compensation, you still end up saving money on taxes. However, it's important to note that even as an LLC, you can choose to be taxed as an S corporation or as a C corporation.
Yeah.
And as you mentioned, because of compliance being a little bit easier with an LLC, I would say it's ideal to form an LLC and then maybe make the election to get taxed as an S corporation.
Okay. That sounds good, and that's what I often advise clients as well. So just to break it down in the most simple terms, a client that has a small company can form an LLC. Where we can form this at Secretary of State in any state, and then they can elect to be taxed as an S corp.
Exactly.
So it's not its own entity classification per se. They just make that tax election.
Yeah, the S corporation is just a tax election. It's not a legal structure.
Yes. So if you have a client coming to you and asking you what is a reasonable income, let's say their business made $100,000 in 1 year, what would the IRS classify as reasonable?
Yeah, so reasonable compensation does really depend on how long the business has been active, what the history of the business's net income is. Typically, audits that I've been a part of, I want to say that they want to see at least 35 to 40% of the net income of the business being paid as salary to the owner.
Okay, got it. And so from a legal perspective, there are a few limitations to an S corp. So you can only grant one class of stock. So if you have two owners involved and they're playing different roles of the business, let's say one is a silent investor versus one is playing the more day-to-day business managerial role and wants to be the decision maker, often we would issue two separate classes of stock. And that's where an S corp could maybe become problematic. Also, if you're thinking really big term, you want to get a lot of investors involved. There is a 100-person or 100 shareholder limit to an S corp. But is there any financial or tax restrictions when it comes to an S corp?
So you can't. First of all, you can't have foreign investors either, right?
That's
so
right.
All members and owners of an S corporation need to be either permanent residents or U.S. citizens, which already creates this big issue around having foreign investment, right? That's where an S corp might not be ideal. Generally speaking, I say S corps are better for businesses where all the members or majority of the shareholders in an S corporation, I should say, are actively participating in it or have some kind of involvement in it. If you're dealing with entities or businesses or investments where you have silent investors or passive investors, I think LLCs and C corporations are better structures for that.
Okay, yeah, I agree with you there. So let's jump to C corporations because from a tax level, everyone hears, oh, I'm getting taxed twice at a C corp level. Why would I ever want to form a C corp? So from a legal perspective, you really want to form a C corp if you have plans on going public one day. If you are raising capital from VCs or private equity, they want to see corporations and they want to see corporations formed in Delaware.
Right.
I often get asked, why Delaware? That's so random. Even if I'm operating my company in California or Texas or Nevada, why would I form in Delaware? And the reason being is corporate law really stemmed from Delaware way back when, and the Delaware courts are very familiar and have set precedent on business law. So there's great deference to directors and officers and their ability for certain protections as an investor if the corporation is formed in Delaware. California has very similar protections. So if you're an investor, you'll be protected in California just as much as you'll be protected in Delaware. But it's really more of a formality thing when you're raising capital. They want to see that Delaware structure. And I've had a lot of clients actually do a conversion where they want to go public in a couple years. They decide to convert from California to Delaware, and that conversion can take a ton of time and effort and legal expenses. So if you have hopes of one day going public, or if you're planning on raising equity, I would definitely just form in Delaware, but you would have to keep in mind that if you're operating in a different state, you also have to do a filing in that state and pay the franchise taxes.
Definitely. Yeah,
So,
I mean, California is more expensive to operate business just because of the corporate tax rate in California is much higher.
which
I
is
believe the corporate tax rate right now is like 8.83 or something around in that range, compared to Delaware, which I believe is like $100 annual registration fee and some other fees, depending on the amount of revenue that you have. But it's significantly less than California.
Yeah.
And I think in that sense, it's much more beneficial to be a Delaware corporation. Now, if you do business in California, California does require that you are registered in California, you file, you report, allocate the income that you earned in California to California. But I think in the long run, like you're saying, if you do plan on going public, you want to be a Delaware corporation.
Mm-hmm. And so let's say I don't want to go public. I decide to form a C Corp. What, let's talk about that double taxation structure a bit.
Yeah, I think this is something that automatically, like a lot of people will see on social media and different platforms where they're saying, first thought that comes to mind is S corporation. Why would you even choose C corporation? Double taxation, don't choose it, right?
Yeah.
But what does double taxation really mean? So C corporations are taxed at the entity level on the income that they earn. That right now is 21%, and it's on the net income of the C corporation. After the net income is taxed, any amount that's left over that gets distributed to the shareholders is going to be taxed as dividends to those shareholders. So in that sense, there's this double taxation that's happening, right? However, if in a C corporation you pay salary to the owner up to an amount that reduces effectively the net income to such a low amount that the tax on that net income is negligible, then you're really only being taxed on the salary that you take from the C corporation.
Got it.
Also, whenever, let's say, if you're trying to go public and you have plans on reinvesting into the business, that the dividends aren't being paid out, so you're effectively only being taxed at the corporate level, and you're not being taxed at the shareholder level because those dividends aren't being paid out. It's being reinvested into the C corporation. Currently, it's at not historical lows, but they're pretty low levels at 21%. And with the Trump administration coming in, we're expecting that it's going to stay at least at 21%, potentially even going lower.
Okay, great. So if, let's say I'm running a dry cleaning business and I'm not making that large of, a month on a monthly basis. However, I do need to take some income from my business to pay my staff.
Sure.
I need to pay my rent. I need to buy, cleaning supplies and, materials for the dry cleaning business. Would you set that up as a LLC, as an S Corp, or a C Corp?
Yeah, I think the go-to in that specific structure would be to set up an LLC, choose to be taxed as an S corporation because you're actively participating. Chances are you're not going to try to convert your dry cleaning business one day into a public company.
Yep.
You're most likely going to be trying to operate it as a business where you're actively participating in. Therefore, you not want to be subject to double taxation from the C corporation because your income is not really high enough where you're going to have to take larger salaries. And salaries is where you're going to have to pay Social Security tax, Medicare tax, both at the employee and employer level. That's why there's that reasonable compensation requirement, is because the government wants to get their FICA taxes, which is Social Security, Medicare.
Right. Okay. And so let's talk about real estate, because a ton of people, at all ages use real estate as a great investment option. And I've seen many different structures in this sort of situation as well, but I typically see LLCs. And that is because you don't want to be in a situation where your tenant sues you for some reason and your individual name is on the line and your assets are on the line. You really want to have the landlord as part of that lease be an LLC to give those property owners some protection.
For sure.
But I know that there are certain tax advantages even without creating an LLC for real estate investors. So what do you think?
Actually, I get this one a lot as well.
Yeah.
It's very common. A lot of people nowadays want to invest in real estate, or they've heard that real estate can create this passive income, this wealth generation over years. So people want to, once they start to make a little bit of money, want to invest in real estate, and they ask me, hey, what's the best structure to do it? From a tax perspective, it's not definitely, but 99% of the time, it's going to be an LLC for a few reasons. One reason is going to be that LLCs offer a much less strict agreement between the owners of how profits, losses could be allocated.
Right.
Whereas corporations and S corporations are more strict based on the profit. The profit percentages are based on the shareholders' percentages in the corporation itself. While in an LLC, you can choose to do it however you want. You can have special allocations, even if someone owns X amount of the LLC. That specific year or that specific allocation could be done at different percentages according to your operating agreement. That's one reason. Another reason that LLCs are preferable is because mortgages act as qualified. They act as qualified basis for the LLC, meaning that you can take much higher tax-free distributions out of an LLC with a mortgage, where you can't do that with an S corporation. And so that'll offer the members the ability to take out money through the LLC while not necessarily having to pay taxes on it.
So let's say a person decides to form the LLC for their real estate property. Let's talk about everyone's most probably common question: what can I use as a deduction? So if they are hiring a cleaning service, or if they are hiring a management company to run the day-to-day, what can they write off as a business deduction, and what can they not write off?
Yeah, anything that's reasonable. The IRS is very reasonable.
They are?
Actually. Most people think that they're not, that they're very strict, that it's either black and white, but it really does depend on your business and what's reasonable to your business. Let's say, for example, if you're an actor, wardrobe is a reasonable expense for the actor because you need that wardrobe for your film, for your set, whereas for a real estate property, you don't need a wardrobe, so you going purchasing clothes for a real estate business wouldn't be reasonable, wouldn't make sense. It's not a deduction. But there might be items for a real estate property that might be reasonable that might not be for other businesses.
Right.
So the way the law is set up is that it says you can deduct anything that's reasonable to operate your business.
That's interesting that they give you so much discretion, and I thought it was a lot more black and white actually, and I think I could definitely argue that I need some bags and briefcases and a whole wardrobe, and that would be a reasonable business expense for me as a attorney in the business transactional space. Sure. I think no matter what, people should defer to their CPA whenever they're questioning a business deduction before they actually make that deduction.
Most people, they know when something's pushing the line a little bit, and I'd say defer to being conservative.
Yes, absolutely. So how about if I use this is what we see on social media a lot. You know, there are certain vehicles that are over a certain weight that could provide a bigger deduction, like a G-Wagon, or, you know, can I buy a new car? I'm an attorney, can I buy a new car, or a business owner, and even though I'm not really driving that much day to day, can I use it as part of a business expense?
Yeah, definitely. So as long as you're using the vehicle for business, you can deduct it under your business. And the way it works is if it's a lease, you can deduct the lease payments. However, if you bought the vehicle, you can depreciate it, just like any other asset that you would depreciate. Now, generally speaking, depreciation is done over the life of that asset. So, for example, vehicles generally are 5-year life. So you would deduct equally over 5 years the value of that vehicle, right?
Mm-hmm.
And the percentage that you would take is the percentage that you use for business. So if you have this G-Wagon and you drive it 70% of the time for business, the other 30% is personal, you would only deduct 70% of the value of that G-Wagon. Now, as far as I'm sure you've heard on the socials where it's, you know, let's buy the G-Wagon, deduct it for the business.
Yeah.
What that is it's this bonus deduction that the government was offering to people, where they'll allow you, instead of deducting it over the 5-year life of that asset, you deduct it all. You get a bonus depreciation. So it used to be 100%, meaning that you can deduct it all within the first year. Now, I think as of 2025, it's only 60% or 40%, and so it's a much lower percentage than the 100 that you used to get. So you want to be careful with that. You want to make sure you're talking to your CPA or attorney, so that you're up to date before you just say, hey, I heard that you can buy this G-Wagon, I'm going to get this 100% deduction. It's not 100% anymore.
Yeah, and I mean, people have to be really careful about what they're seeing online, because they just think that they can deduct everything left and right, and even though the IRS is really reasonable, in certain circumstances it could trigger an audit, or you know, you don't want the IRS.
Yeah, that's what planning is key, right?
Yeah.
So you want to make sure you plan ahead of time. You don't want to shoot first and ask questions later.
Right.
You want to make sure that you're planning, you're talking to your attorney, your CPA before you make a move. That way it's not costly later on.
Right. So let's ask you your probably most favorite question. Lazar, how can I lower my taxes? I'm so sick of giving all my money to the government.
Yeah.
What can I do as a business owner to lower my taxes? And I know it's such a broad question, but maybe let's tackle a couple of the things.
And it's funny you're asking me, because sometimes I feel like I'm a psychologist almost. People will come to me and they'll say I'm paying so much in taxes, and I have to sit there like I know. Obviously,
everyone does it.
but we do help people lower it. It's not about eliminating it. You can't eliminate it, especially if you're making a lot of money. However, you can reduce it significantly, both on the percentage that you're paying and the amount that you're paying, right? And the way that happens is that you need to do planning. Planning is key. So a few different methods that you might use is, one is retirement plans, one is investments. Another potential avenue is setting up different trusts or setting up different investment vehicles where you maybe allocate money. Another potential avenue is making sure that sales of assets or businesses take place in one given year or another given year, depending on your current year taxes or your future expected taxes.
Mm-hmm.
So let's dive into a little bit, for example, retirement, right? If you pay yourself compensation, so salary, you're eligible to create a retirement plan where you can contribute up to 25% of the amount that you paid yourself and your employees as a contribution towards a retirement plan, which would be a business deduction.
Mm-hmm.
Another way that you can help save on taxes is assets. So one thing that you mentioned is buying a vehicle, right? So that's investing into an asset that will give you this depreciation, which is a non-cash expense, right? But it's going to lower your income. Another potential avenue of reducing your taxes is, for example, if you have a business outside of your current one where you have losses, you can use those losses to offset the income that you have from your business. So it's not one thing. There's no one magic formula. It does depend on your specific situation, and you want to make sure that you incorporate as much as you can of these different planning methods to ultimately reduce it as much as you can.
Right. So it's not one thing that's the G-Wagon is not gonna prevent you from paying taxes throughout the year, but it's many different items that can help the overall rate. And I think you bring up a good point, and I just want to echo this for the legal world as well. Every situation, every client is different, and we want to be able to look at a business holistically and figure out the entrepreneur's end goal. So is the end goal an exit? Is your end goal just making money off your business and running it for the next decade? Like what really is your end goal here? And then we can kind of reverse and backtrack. And I love when my clients get CPAs involved because it makes my life a lot easier, and that way I can have meetings with the CPA and the client, and we can all get on the same page about what we can do to really make this business successful.
I think some people are hesitant because of the initial cost. I think people will look at attorneys and CPAs and think, okay, well, it's very costly, and that might be true for certain individuals, and might not make sense for every single business. But I would say in the long run, you're going to end up saving money because you're going to take the right decisions, and you're going to make the right moves from the start. That way it's going to help you save money, and you're not going to come into these complications where down the line you say, oh, well, I messed up, now I gotta convert my entity, or I should have done this, or I should have done that.
Or I'm already getting sued by my tenant, or I've already paid an insane amount of taxes the first year and I can't afford to pay my taxes.
And the amount that you're gonna lose potentially is gonna have paid the attorney and CPA many times over.
Yep, and I agree, and I think we're both very reasonable when it comes to entrepreneurs as well. Like, we understand the startup life and how it's hard to get.
We're entrepreneurs ourselves.
I know, we're entrepreneurs and we're business owners ourselves, so I get it. I get the fact that a lot of people don't have the means to really spend a lot, but the key really is planning and getting all your ducks in a row before you launch your business and before you make significant moves, because it will cost you a lot more in the long run if you're backing tracks. So.
And if you're not sure, just schedule a consultation. We'd love to talk to you. We'd love to discuss. See, maybe you are the right fit, maybe you're not the right fit. And from there you can decide if you want to go ahead or not.
Absolutely. So where can clients find you?
So you can find me either on Instagram. You could also find me on my website, which is Ter Arsenyan CPA.com. And my office is in Encino, but I work virtual. I also work in the office. People can reach me at many of the various contact methods.
Awesome, and I can vouch for this myself. Azad always makes himself available and is just one phone call away, and I very much appreciate that. So thank you so much for your time, and I hope this was helpful for you all.
Thank you.